The global economy is on a ticking clock with only weeks left to avoid a recession. What could trigger this crisis, and how close are we to the edge? Mohamed El-Erian, former CEO of PIMCO and chair of President Obama's Global Development Council, has issued a stark warning. He says the global economy must avoid recession within the next 4 to 8 weeks. The situation hinges critically on reopening the straits, a key trade route. If this does not happen within this timeframe, the world risks entering an economic downturn. This countdown highlights the urgency of current geopolitical and economic conditions. One significant factor adding pressure is the spike in Brent crude oil prices. Recently, prices surged past $125 a barrel, the highest level seen since 2022. This sharp rise reflects growing uncertainty as hopes for a swift resolution to ongoing conflicts fade. Higher oil prices increase costs for businesses and consumers worldwide, worsening inflation and slowing economic growth, both key recession triggers. Historical financial signals also add to concerns. Back in March 2019, an inverted yield curve and drops in global stock markets signaled a recession was near. Today, rising debt levels in major economies like the European Union and United States echo those warning signs. These financial market indicators often precede economic downturns, making the current environment especially fragile. The European Union and United States carry significant debt burdens. This financial strain means that if the global economy slides into recession, these regions could suffer the most. Elevated debt limits government and corporate ability to respond effectively to shocks, increasing the risk of prolonged economic pain. Consumers worldwide may feel the impact through job losses, higher prices, and less economic opportunity. El-Erian stresses a key condition for avoiding recession: the reopening of vital straits within this tight timeframe. These straits are crucial trade routes affecting global supply chains and energy flows. Their closure has contributed to economic disruptions, including the spike in oil prices. A reopening could ease supply pressures and restore market confidence, potentially steering the global economy away from recession. The clock is ticking for the global economy. Just weeks remain before we face a potential recession that could impact jobs, prices, and your financial security. Stay informed and prepared as these economic shifts unfold. For more updates on how this affects you personally, subscribe to Daily Q&A.